spaces for people. I don't know if you've ever been to one of these organised theme parks and they go down the line, down the line, down the line. Right, okay. Right, we're going to get going and hopefully some more people will join us. My name, as I say, is Mel. You can see all of our beautiful faces. Look up there. Oh, yeah. And I'm just going to introduce my panel, first of all. They've all had their briefing on the basis of this morning. When you get your intro of your name, your role, your organisation, and just one line. And then we're going to, because I want to make sure that we've got plenty of time for you to ask questions and also questions from Slido. So, first of all, Layla, on my left-hand side, we talked a lot about resonance. Actually, we have earlier in the session, and Layla's going to be talking to you a little bit more about what her organisation does. Then we have Carolyn, who's Director of Lending from Charity Bank. I'm going to do this disclaimer right now. So we had, in the last session, didn't we, about the IC banks, not the social ones, okay? So you've got at least 3 social banks here today, so do make sure that you go and talk to them. They're all really friendly people. I've got Christian Stanner from Social Investment Business here as well, and also Hannah on the far end from Growth Impact Fund. So we're going to get started. This session is all about Ask the Investor. This is where I have to put my glasses on because I can't see anything. And we're going to spend some time talking about investment from the investor's perspective. There was a really interesting perspective, actually, the lady in the front row, I was going to try and catch you later, around what makes social investment social. You know, is it more patient? Is it more risk-bearing? And the answer, I'm sure, will be it depends. So we're going to try and talk a little bit more about that. But we want to understand a bit more about the process from start to finish from a social investor's perspective. We heard a lot from the enterprises this morning. Actually, it was surprisingly positive. It's a nice realism, but, you know, that's not always going to be the story. We're going to explore a bit more about what makes you say yes to a prospective investee. And we heard a lot about, this is all about people, and it's all about the vision and the business, but it's also about the numbers. And it's also about where the investor gets their money from, picks what type of risk and what type of investment that they can take. We're going to have a look a bit at the process of what social investment looks like and where some of the most common challenges and pitfalls that might arise. So we're going to see them from the other side of the coin. And we're going to explore that bit about, are social investors really too risk averse? So let's just start with one piece that we should all understand. I think this came out fairly clearly, although we didn't actually get into the sort of the products of the lending, that not all social investors do the same thing. They don't all have the same type of money. They don't all do the same type of lending. There is a very wide range of products and funds available. We've tried to make sure that you've got quite a stretch of those products and lenders in the other room. That's by no means representative. If you go onto Good Finance's Fund Mapper, you will see there's a much more exhaustive list of different investors, both nationally and regionally. But I think the thing that I took away from this morning, I hope you did, is that it's really important to find the right partner for your organisation, find the right investor with the right money. So let's start, and I'm just going to ask each one of the individuals to just tell you in 1 to 2 sentences a bit about their organisation, who they work for. Start with you.
Well, 1 to 2 sentences on resonance is quite challenging because we are quite a broad-based social impact investor. I have to start by saying the majority of what Resonance does is purchase properties on behalf of charities to provide housing for people experiencing homelessness or with learning disabilities and women who need safe homes. However, I'm part of our Impact Labs, and our Impact Labs have 3 different funds in them and deliver various types of funding. We have our community developer team who work with social enterprises who are building their own residential housing that's affordable, and that's often community benefit societies, but they also work with other community projects like community renewables or community-owned other assets like pubs or centres. Then we have a team who work on the Youth Investment Fund, which was grant funding. We are partners on some other funds here. So we work on specifically renewable energy funds. And then I work on our Growing Enterprises team, and we deliver direct investment in social enterprises in the form of loans, launchpad loans, which are small set loans, revenue share, and equity. So we have a wide range of investment options, and we direct people to the right team for them and the right product for them as much as we can.
Super, thank you, Carolyn.
Charity Bank, as the name Charity Bank, as the name implies, is a registered bank. We're fully authorised and regulated, and as a consequence, we take deposits in. We're an authorised deposit taker, so it is our depositors' money that we lend, and so we probably take slightly less risk than some of the other funds. We are a long-term lender. We can provide loans of up to 7.5 million for the right sorts of organisations. We lend predominantly long-term, but we can lend short-term as well for shorter-term projects. We also have something called our LEAP programme, where we provide a blend of loan and grant finance, and our LEAP programme can take more risk. We do lend in that programme. We can lend unsecured. We have other programmes that we have. We're running a green energy fund as well to help organisations make their buildings more energy efficient. That's available to existing borrowers only. And we're looking to see how we can expand our offering in that sector as well, because we want to do more in the green energy space. But basically, we're open to any sort of lending. What matters to us first and foremost is the impact. So if you approach us, as you would probably most of the social lenders, they will ask you about the impact that you're going to deliver first and foremost. Security, etc., comes second. It is the impact. And although we call ourselves Charity Bank, we're not restricted to lending to charities. In fact, we're not actually very hung up on the types of organisations we lend to, as long as the impact is there, the social impact.
Thank you. Christian, to you.
I hope this one's right. Yeah, so social investment business, we've been going over 20 years now. We're a social investor. We've done lots of different things over the last 20 years. Our kind of piece of the market is simple, repayable term loans. Unlike Charity Bank, we tend to be quite short term. So we're looking for loans that are repayable over like 6 up to 10 years for one of our funds, which is slightly unusual for us. And yeah, obviously, as a social investor, the impact piece is incredibly important, and then obviously it's the kind of the financial risk as well. Just a couple of examples of the loans that we've got at the minute. We've got an energy resilience fund, like Charity Bank, which is around helping charities and social enterprise bolster energy resilience. That can invest in assets or invest in kind of buildings as well. We have a flexible finance fund, which is around increasing access to social investment for black and racially minoritized organisations. And we've got a straightforward loan fund, which can lend for pretty much anything, so whether that's cash flow, investment in assets, business development stuff. So yeah, simple repayable term loans, that's kind of what we do.
Lovely, thank you, Christian. Can you hand over to Hannah? Cheers. Complete our panel.
Thank you. Hi, everyone. So Big Issue Invest, you've probably heard of the magazine, Big Issue. Big Issue Invest is focused on social investment for social enterprises, charities, social purpose organisations, and it's all about ending poverty in the UK. So we have quite a few different funds. I'm really proud to be part of the Growth Impact Fund, which is one of them, and that's really focused on providing flexible capital in a few different ways, like resonance. So we do equity, we do quasi-equity, and debt. We're not too hung up on the structure of the organisation, and we're primarily focused on underrepresented founders, so we want to hear from you. And also we want to focus on social inequalities that you've experienced in the UK, and that lived experience results in you setting up this enterprise that we want to support you to continue. So that's the Growth Impact Fund. We go across sectors, so consumer goods, health and social care, employability and training, education and learning, and tech for good. And then we do have Fund 4, which is more for larger organisations, which is debt 1 to 4 million. Again, our focus is more around the flexible capital and giving you the right structure that you need at that point of time, and again across those sectors, and affordable housing as well. And then we also do smaller ticket loans, like Christian as well, so like the 100 to 400k tickets. And we're out in the regions a bit more as well, so beyond London, as you can probably detect my northern accent. So there you go.
Lovely, thank you very much. So you've already heard there's a wide range of products there. We might have already touched on some jargon, so things like quasi-equity or revenue participation, secured debt. You can check out the Good Finance Jargon Buster, or if you want, we can always ask people to explain. So one of the things that I've learned when I came to this sector, and I don't have a finance background either. I'm from the Midlands and I sold ladies' fashion for 20 years. Is that you shouldn't be afraid of all of these terms. People have told us you don't want us to dumb it down, but you do want us to tell you what you mean. I remember somebody saying to me early on, it needs to be a sophisticated investor. And I was like, well, what's one of that like? Does that mean you have to be like, and they were just explaining that it was a type of investor that had to have a type of certification. So just make sure that we tell you as it is. What I've asked each of the panel to do this afternoon is to concentrate on a slightly different part of the journey of taking on investment. So I'm going to start with Carolyn, and I'm going to ask you, why social investment? Oh, sorry, I'm going to get told off. I've missed one bit before I ask you this. I mustn't forget that we've got our online participants as well, and you still can use Slido, because the question that we're asking you is, we asked you before, didn't we, from the other side, so what are your perceptions of social investors? It's all going to be on the screen on Slido. So I will come to some of those reflections, but we're going to start with why social investment, Carolyn. In the previous panel, the speakers, they covered their personal experience of social investment. So let's start with the first half of this. Why should social investment be a consideration for impact-led organisations? And when is it the right option?
I think social investment gives you the chance to either start a business, which is, I know from talking to some of you is why you are here, but it also gives you the opportunity to expand your business. It can help you secure your future as well. Quite often we deal with organisations that actually want to own their own buildings, so they're not at the mercy of landlords. You've heard this morning from the organisation that's bought a number of houses, that's providing affordable homes. It's about controlling your future and controlling your destiny. I think, though, what's really important is about having the right social finance, going to the right lenders. I think social lenders can help you enormously. We're all very well networked. We all know each other very well. We work with a lot of the trusts and foundations as well, and quite often it isn't just about a solution from one social lender, it's about a blend of different organisations coming together to give you the right package of funding. And I think also, I think social lenders are very transparent, probably more so than other banks and financial organisations. It's about providing the right package of funding. And quite frequently, we know we may not be the right funder for you, and we will very quickly say to you, don't talk to us, talk to Key Fund or talk to Big Issue Invest. It is about doing the right thing by the right organisation. And there are times, to be honest, where debt finance or social finance isn't the right option. Occasionally, sadly, we have organisations that come to us and say, we can't afford to pay our wages next week. In that case, debt finance isn't the right solution. But I think it's to help you grow, it's to help you meet your aspirations, and it's to help you hopefully become more sustainable in the future.
Okay, so building on that then, Carolyn, at what point or when should organisations start having conversations with investors? And how is the best way, you think, to initiate some of those conversations?
I think it's never too early to start a conversation. We've got a number of clients where we started conversations 4 or 5 years ago. In fact, we have one organisation, they've had a committed facility from us for 7 years and they still haven't drawn the facility, but it's sitting there waiting because they know what they're going to do. It just unfortunately involves a lot of local authorities coming together and a lot of grant money, and it will happen at some stage. So I don't think it's ever too early to begin the conversation. You may find a social investor will give you a steer as to what you need to do, what you need to produce. You may have an idea, you may have a business plan, and the social investor may say, well, actually, we think you need to do a bit more market research. You may need to beef up your business plan. An awful lot of us sitting here are what's known as access points. We have access to something called the Reach Fund, which can give you grant funding to help you become, it's that awful adage, investment ready. But, talk to a social lender early on, because there may be things we can see that we think you need to do. And as I say, we can probably help you access grant monies to be able to achieve that. So I think those early conversations are really, really important. And you need to have a fairly firm idea whether what it is you want to do is actually fundable from a social investor.
Oh, so you've just completely got me to the next question. Well prompted, which is brilliant, which is this. So We talked a lot about what organisations need to do to be ready, whether it's cash flow forecast or thinking about their governance. But when you're considering these proposals, what sort of considerations do you need to make before you can give them that advice, support or signposting?
I mean, I'm going to talk specifically for Charity
Yeah,
Bank, but
that's
I
fine.
think the same pretty much applies for everybody here. I mean, first and foremost, we will be looking at the social impact. What is it you want to do? What it is you want to deliver? What's going to be the benefit for either the local community or for the disadvantaged groups that you're trying to work with? So that's what we will need to understand first and foremost, because at the end of the day, all of us sitting here are social impact lenders. And then it's about the project. What is it actually you're going to do? Is it financeable? Is it going to deliver an income stream that's going to help you repay a loan? You know, just to make sure that actually loan finance is for you. We will all take a look at governance. Have you got the right governance structure? Have you got the right people involved? Are the people sitting on your board, do they come with the right skills, or maybe there's a skill gap? Quite often we look at boards and feel that there is a skill gap, or we feel that maybe they haven't got enough directors. So it's a real wide range of aspects that we look at. And of course, fundamentally, there is the test: can you afford to repay the loan? You know, with all likelihood or all probability, is there going to be enough income to service the loan? And have you done the right sorts of stress testing on your financial models, on your cash flow forecasts, etc.? What happens if things go wrong? Do you have a plan B?
Yeah, lovely. Stress testing, we're going to come back to that, and what happens when things go wrong. And there's so much in there that we can sort of go. Let me move on a little bit in the journey, if I can, to Hannah. So we've done the why social investment even should be a consideration. Now let's have a look a bit more towards the actual journey of getting investment. We talked a lot about this earlier, didn't we? About, how do you know that you found the right investor and what should you look for?
Yeah, it's a really good question. I think we always think that actually, any investor's good, but this is your selection process. It's a two-way street. So really have a think about not just the capital, but do they have the domain expertise for the area that you want to invest in? Do they have industry connections? But also, you're going to be in this relationship for a long time. It's like a marriage, right? So do you see those characteristics that you like? Are they going to protect your impact? And can you see, can you go through the rough times with them, right? So really have a think about those broader pieces, and do they meet the flexible capital needs you need as well? Because it is quite unique in this sector.
I love that advice. It's definitely, you shouldn't feel... I've heard people say that I felt a bit outsmarted, or that I had to take what I was offered, and it definitely needs to be, the balance of power needs to sit in both camps. So thank you for that. So we started to touch on it a little bit before, but perhaps you could just talk us through what a typical, and I know it's difficult to be typical, but typical social investment journey might look like. And then perhaps we can move into due diligence and, what is it social investors are actually looking to achieve through this thing that's called due diligence?
Yeah, sure. So one thing I would say is if you're looking for investment, first thing to do is do some research on the different type of investors you're looking at. Typically, there's two areas in their investment thesis they will focus on: the sector or the problems they're trying to solve for, and then the type of founder they're looking for. If you hit one of those categories, apply. That's it, that's the minimum you need. But if you do cold applications, we can tell as investors, by the way, if you haven't read the thesis. I would say just primarily do that as a first step. And then in terms of the journey, it's a lot of back and forth, right? So you'll submit your application, and initially we'll have a founder interview and just get to know you better and understand your journey and hear your story. And then each deal is a bit different based on the type of investment, but we'll dig deeper in certain areas and ask more questions. But thinking about the materials and the things you need to produce, yes, a really sound business model, thinking about the sustainability and the scalability of that as well. But we also are trying to understand the founder. So we want to know, we're investing in people, not just ideas. So from a founder perspective, are you teachable? Are you open to new perspectives? Are you able to pivot? Because a lot of the times what you start out with isn't what you end with. And then in terms of the financial piece, and I see this a lot as well, is don't underestimate yourselves, but also really share strong assumptions and risks around your financials as well. So think about it more broadly, do the whole market risk, the full perspective, a bit more exhaustive, and then demonstrate the customer and the end user that you're trying to sell to as well. The closer you are to that, then we know that the closer you are to the problem, and that you're the right person to solve it. So think like, why is this a problem? Why now? Why me, and why this solution? Like in a summary.
Fantastic, thank you. I often like to say, if I give you this analogy, a bit like the dragon's den, but without the dragon. Okay,
Yeah,
so they're much more like cuddly teddy bears, I think, But it's still that level of preparation, I suppose, knowing your numbers, knowing your business, and being prepared to answer questions on it. And so I suppose that is why do investors ask so many questions?
Because we're just trying to be difficult. No, I'm joking. We're not. It's because we want to validate that, first of all, you're the right person to invest in. We believe in your mission and we're aligned. And secondly, that this is a viable business, right? So we don't want to say yes. So a lot of the time we see, organizations will say yes, take you through this really long process, and then you hear no at the end. So I'd rather we're upfront and say no sooner, or we take you through and redirect you. I think, like Carolyn, you said, let's redirect you to the right investor, if it's not us, right? So we have a responsibility to kind of keep you in the ecosystem as well.
Okay, and then my sort of final question here for you, Hannah, is the question here says, how long is a typical social investment process? I'm going to reframe that slightly for you. How does an entrepreneur know what to expect about how long the process will be?
Okay, so if I keep it really real with you all, it is I'd say 3 to 9 months, depending on size of deal as well. So from point of application, and then, you go back and forth, we need to get investment committee approval. And then, we're over the main hurdle. Legal always take time, sweet time. So those things take a bit longer. But what I will say is, if you respond quickly to us, we will match that energy and respond back quickly, right? And what I have also seen is there's a lot of solo entrepreneurs, right, which is really tough, but fundraising is a full-time job. So I would encourage you to find partners in crime and share the responsibility, and also cap your fundraising period as well, so it doesn't drag on. So give yourselves, if it's 6 months, go out in the market, go really hard, and then finish at that point and close around. And try and look at multiple investors and not all your eggs in one basket as well.
Lovely. So definitely feel like you can ask those questions. How often does your investment committee or panel meet? What's an average period for investment? I think that's really fair, 3 to 9 months.
Yeah.
Some people I know have done it much, much quicker, but that's not the norm. And
It's
I think what most entrepreneurs would like is what's the norm rather than the outlier.
I would also say, feel free to share your timeline. I'm going to close around by this point. So, can you move a bit quicker? Then we'll be like, oh, actually, we need to prioritize this. So it does work. So feel free to share your terms as well.
Okay, lovely. Thank you very much, Hannah. Right, coming to you now, Leda. So you've got, why social investment? What's the process look like? But then what comes next? Because once you've got the money, it doesn't just stop there, does it? Christian, will you?
So the first important thing when you've got the investment is do not spend it all at once, because think really carefully about how you're spending the investment. I've seen a lot of organisations, the money's come in, and all the things they've been holding back on, they go straight in, and it all goes a bit like students when they first get their first chunk of student money, and then they get halfway through the term and they're going, oh, hang on. So that's not what Mel's asking, but that's what I'm telling you. Then the other bit is to think about how you're going to report to your investor, because we want to hear from you. We like you. We invested in you because we think you're great. And we also want to know how things are going. We want to know if you've hit any hurdles or any bumps. So I expect people to check in with me in the first year. Every month or so, tell me how they're going. And then as things go well, which they should be, it might be less often. We might then have a conversation every 3 months. And then it might be towards the end of an investment, if things go really swimmingly, that we have a face-to-face meeting once a year and somebody completes an impact report once a year, and that's pretty much all the contact we have. But we also ask, and this is really important, for people to send us, and I think everybody will have the same requirements here, your financial figures every month, or sometimes slightly less often. Now, the important thing with your financial figures is you need to know them for you. We want to see them so we can see if we can spot any trends. But one big issue for many social enterprises is understanding their figures. And a lot of people social enterprises will have an accountant, and they'll say, well, my accountant does my figures, or my bookkeeper does my figures, but you have to take ownership of them. So if you do not understand the fundamentals of your financial figures, talk to your accountant, talk to your bookkeeper, make sure you really, really know what it is. There's no point just looking at your bank statements. You have to understand what the difference is between your revenue and your profits. You need to understand if you've got a positive balance sheet or not. You need to understand who owes you money, how much they owe you, how long it's going to be since they're going to pay you. So you have to drill into those numbers and understand them. And that means you can then steer your forecasts, and your forecasts tell you if you're going to run out of money or not. And that's really important, because cash flow kills most businesses. That means that even if you are expecting to be paid by a big supplier, somebody you've got a big contract with in 6 months' time, but you can't meet your bills for the next 3 months, you will run out of money. So you need to know that. So that's what we expect. We expect you to have your figures and talk to us about them.
Okay, so that's the management information. There's two bits there. There's the relationship, and then there's the management information. I think if anybody lends you money, I suppose if you get a grant, you're still expected to do reporting. So what happens when somebody stops sending you management information, or you're there because your business plan's not going according to plan? And I've done this. I've run a social enterprise and been on the other side. What kind of support, or what kind of what are you used to happening when this happens? How often does it happen, Lena?
I mean, more often than we would like, but less often than you might think. So the first thing that happens is, ideally, you'll have contacted me or one of my colleagues or one of the other and said, actually, we think we've got a problem. The chances are you're probably a bit scared and you probably won't, and so we'll notice that there's an issue or there might be an issue, and we will reach out and we'll say, you were a bit late in your payment that month, or you've missed your payment, or you haven't sent that information over. Let's have a conversation. And we have a conversation, and it should be a really open and honest conversation. And it might be, somebody was late paying me, but it's all sorted now. Great, box ticked. It might be, actually, I had a conversation yesterday with a social enterprise. They have school trips that regularly visit them. That's about half their revenue. And they have other revenue from other sources. Their school trip revenue has really dried up, and they're concerned about where their position will be, not this year, but next year. And we had a long conversation about how they might generate some other revenues, where else they might get income from. We went through some tools. I've shared them some documents so they can go away and work with their team and come back to me. And we're going to stay in contact for the next few months, every single month, have a conversation. And that's the sort of support I think every single social investor would expect to deliver.
Okay, lovely. So can you just give us some more examples about, when things go wrong? That's what we get asked all the time. What happens when it goes wrong? Can you give us some more examples,
More examples?
Yeah.
We've sent one enterprise and worked with them on a full improvement plan. They were really struggling with their management, accounting and reporting, and we sat down and we mapped them out a series of milestones to get things in place to help them with their reporting. We've given people, as you'd expect, repayment holidays on their loans. Don't be afraid to ask for one. Please don't be afraid to ask for one. And it might be a capital repayment holiday, which means the main bit of your loan. It might be an interest holiday, which means the interest you're paying if it's a loan. It might be both. It might be a month or two. It might be longer. It might be that we say, well, actually, you can only afford to pay £500 a month when you were supposed to be paying £750. We'll make your payments £500 and we'll add the balance to the end of your loan, stretch it out. I mean, from our perspective, we try and be as flexible as we can within reason, paying in mind that we have to repay our investors and we might have terms we need to meet. So we'll do our best to work with you to mean you don't get into that problem. But if you are in a problem, we'll be as flexible as we can be.
Lovely, thank you. We often hear this, that it's about so much more than the money. I've known investors to go into contract negotiations. I know that people have done varying loan term changes because the needs of the market they might be working in changes. I've known to help with some of those skills gap deficits, like getting board members. So let's move over then to Christian. Right, we're going to move now to an investor's perspective. So I feel really good about this actually, because this is the question that I always get asked. So it's great to be able to ask somebody else this. Are investors too risk averse, Christian? And what are the constraints or limitations that investors face when lending?
Everyone's looking at me now.
Yeah.
Are they too risk averse? Yes and no. So there you go, perfect answer. I'm going to sit on the fence. It depends on the investor. I think, what's clear is there's lots of different social investors. We all kind of do the same thing, which is lend charities and social enterprises money to do more good stuff, but we all have slightly different products. We get our money from different places. So obviously there's terms and conditions around that. So some social investors will certainly take more risk than others. What we're seeing at the minute, there's a big growth in kind of place-based investment. So there's the investment fund from the Northeast, which will take a huge amount of risk, and it's a lender of last resort. It's a social investor, and it will take a lot of risk. Some social investors, because they have certain write-off rates that they can't go under, we have to give a financial return to investors. It can be harder to take risk. So it depends on the social investor. It's the long and the short of it. Yeah. I would love social investors to take more risks. I would love there to be more stuff for kind of really early stage startup. I would love there to be more stuff like repayable grants. I would love there to be more stuff around equity. But, it is where we are in the market. But, at the same time, social investors, we're not banks. So, I've spent time in banking a long time ago. Very, very risk averse. Social investors aren't that. It's just around understanding what the risks are and how we mitigate them. So a social investor will take a lot more risk than a mainstream funder would.
Lovely, thank you, Christian. So can you perhaps, again, building on this piece about how investors can support leaders, we talked a little bit in the last panel from the entrepreneur's perspective, and we've had some examples here, but I just wonder whether you could give us some different examples, some examples of things that you've worked with about how you've given that support.
Yeah, so I'll give a couple of specific examples that we do. Carolyn mentioned something called the Access Reach Fund. So what that is, it's a program that we manage. It's a grant fund. If you go to a social investor, which for the Reach Fund is obviously known as an access point, and they like your idea, but they feel like, some specific piece of work needs to be done. It can be around pretty much anything, it could be financial modelling, improvement in governance, anything that they feel is like, it's not about helping you at the very early stage of your journey. The way it normally described is like it's the last piece of information, it's the last piece of the jigsaw. So you can go to a charity bank, a BII, a Resonance, there's about 25 of them, I think. They will put you through that program. You will get a grant. I think the average is about £10,000. You can go in and do that work. So that's a very, very specific grant program to help get you social investment ready, and obviously to unlock that deal. So there's that. I'm going to give a really specific example as well. We deliver something called the Flexible Finance Fund, which is all around increasing access to social investment for organisations which are black and minority ethnicity led. We work with two sector partners. One of them is in the room at the minute. So there's two sector partners. There's one called the Ubelli Initiative. There's an organisation called Create Equity. They will work with people at both pre and post application stage. So they will work quite intensely with you to make sure that you are supported all the way through putting an application together, all the way through the assessment process. So some specific bits of support for specific organisations which have been excluded from the social investment market. So that's two examples of what we've done. But again, I think what everybody's shown you is it's relationship building. So even if it's not a specific program of support, even if it's not the Reach Fund, even if it's not our flexible finance program, every investor is going to want to get to know you and will have their own. It could either just be through their support and their advice and the benefit of their experience, or they might be able to point in the direction of specific support programs.
Okay, lovely. Thank you, Chris. And I'm just going to give you a warning. We're going to come to questions just after this last one. So actually, you beautifully flowed into this one for me. almost like we've practiced. I mean, we heard this morning, we can talk about specific pieces of funding or initiatives like Growth Impact Fund, like the Flexible Finance Fund, but I think none of us can sit here and say that there are not challenges or barriers that experience, that there isn't equitable access for all. So, Kristen, what is an investor's role in ensuring investments are made equitably into people and communities across the UK? I suppose what I'm asking is, how can we all do better?
I genuinely think it's an incredibly important question for people who haven't kind of sourced. Obviously, I'm from the northeast, so a very kind of deprived part of the world, and there's two sides of it, isn't there? There's kind of the communities that we serve in kind of left behind areas like the northeast, and then obviously there's more general characteristics. Things like our Flexible Finance Fund. I won't go into too much detail. We delivered a fund during COVID. We recognised that we were not reaching obviously organisations which kind of black and minoritized, ethnicity led. We went out, we designed something, we've kind of delivered that for the last 2 years, and it's working fantastically well. So I think that's a really important, it's a really good example of kind of how a social investor can make sure that funding goes equitably. In terms of obviously just more general geography stuff, I'm sure everybody's aware of like the IMD database, which obviously ranks areas of deprivation. We are targeted on that. Social investment business is an internal target. We commit to committing a certain of our portfolio in IMD 1 to 3 areas. We publish our data, so we're very into open access data. If you go on our website, you can see every one of our investments, where it was made. You can kind of filter it by different criteria, including IMD, and we tend to smash those IMD targets. So yeah, I think in terms of geographical spread, that's incredibly important as well.
Okay, but we're always conscious of who isn't in the room and where we're not reaching. And so that's still something that we have to do more. I remember an organisation based in the Northwest who said to me, the problem is you always keep saying, or social investors keep saying, that you're unable to reach communities. You're just not having the right conversations in the right places, and that's on us. So I'm going to go to ask the audience. I feel like I'm on Who Wants to Be a Millionaire. Right, so questions from the audience for the investors. I have a couple of really good ones, I say, online. But if I have any hands up, and then I'll take some questions for the investors. That's never ever happened to me. Nobody wants to ask a question. Goodness, right. Yes, brilliant, well done. Can Grace give you a lovely thank you? Oh, sorry, I didn't realise it was there. Lovely. Just tell us who you are and your organisation. That's great. Feel free to stand up if you wish, sit if you wish, whichever you like.
Sorry. Hi, everybody. My name is Peace, and I'm representing Avant-Garde Properties. It's a startup for housing for people in BAME, which is black, and So thank you to all the panelists. I think it was very helpful to hear all of the information you've provided. With regards to earlier on today, one of the panelists before said something. She said, "Oh, when I started, I think that was Tammy. She said I had access to a grant, which was pre-seed kind of an arrangement of that sort." So I'm not sure, I didn't get the chance to speak to her. I'm not sure what's happening in the market today. And I know I've looked at some of your profiles in the past, and you tend to lend, there has to be proven track records and all of this. And Kristen, you just said, in answering the question about how to improve, you said you started something for ethnic minorities. So what I was just wondering is, have you guys considered anything else that might help, businesses starting before getting that track record? It's just like somebody graduating from school and you say, I need you to have 5 years experience, but then, I've just come out of school. So if somebody's starting out and there's no grant, no support, and you're expected to get 5 years track records before you can access social funds, that's a bit difficult.
Okay. So if we just try and, I think, paraphrase a little bit, tell me though if I haven't got this right. So it's this bit around startup support, which we know is not always the easiest. Hannah, did you want to?
Yeah,
go?
sure. So I think it's a really valid point, piece, because I found it on our fund as well, that when I look at our pipeline and the demand that comes in, we have a really high demand for pre-seed. And we said revenue traction first, right? So we've actually tweaked, because we are a learning fund and we want to learn and adjust to the market demand. We've tweaked it and said we'll consider pre-seed. We still want traction, but a different type of traction, right? So your product's out in the market, or you've tested it with a group and you've proven that there's an appetite and a demand for it. So there's different ways of traction, like letters of intent, that you've got agreements, or you've given a free version of an app and you've demonstrated that people use it and it's sticky and it's continuing, those type of things. So we are trying to open those doors a bit more. The Growth Impact Fund also has a pre-investment fund, like type of grant funding that we offer to say we'll get you investment ready and come back to our investment committee and present back, so that it's not like you're left, there's a big gap as well. So I think combination of the two, and we have to take, I think, as investors, that learning back to the table and share it within the ecosystem. So thank you for raising that as well today.
Yeah, lovely, thank you. Anybody else on the panel? Layla, do you want to go?
I think you need a range of people at different places in the market, and so our Community Developers Fund, which works on housing, does do pre-development investments and does have pre-development funding available, but our Growing Enterprises team does not, because we are focusing on growth stage enterprises. However, we have good relationships with quite a few specialists in early stage who, if somebody comes to us and they're not ready for us, we will refer to them. So Unlimited, the Four, the Rank Foundation in certain geographies are some of the ones that I might send people to.
School for Social Entrepreneurs.
School, SSE, yeah, School for Social Entrepreneurs, yeah.
So, I mean, and I think the other thing is, again, I always feel like I'm a bit like a BBC presenter. There are other forms of social investment that are available, as well as the 15 people here today. You know, it isn't beyond the bounds of possibility that crowdfunding, and there's different types of crowdfunding, so grant, reward, and also investment. There have been quite a lot of successful pieces like that, or taking Ebony's story of £10,000, starting, you know, small. I remember you saying, I think you trebled your impact by taking that sort of, trebled the amount of people that you could service. So there are, I'm not going to try and sit here and tell you that the startup funding is the easiest part of the market. It isn't, because definitely some investors will need that track record, but there are definitely some other ways that you can look at this as well.
Can I just jump in there? I think it also depends on where you are on your journey. I don't know whether it is pure startup funding you need, but you're fortunate in that you're looking at housing and presumably affordable housing, because a lot of lenders, when they say they won't fund startups, they will fund startup housing projects, because there are good assets there and there are income streams to lend against. So community land trusts are a really good example of that. Most of those are startups. By the time a social investor will lend, they've actually got sort of, they know where they're going, they've got their business model, but they will provide when there isn't a track record.
In fact, I can give you a really good example, a charity bank one. I won't say where it is, but it's in Yorkshire and Humber, but I won't say more. But I remember looking at this because it was for an awards. They had no employees. They had a £13,000 turnover, and they borrowed money to buy 2 properties, because the purpose of it was a charity. The purpose was to provide affordable housing to try and enable residents to stay in the locality. So yeah, if you're looking at property, and check out, a little plug for Good Finance there. There's some great case studies on Good Finance with other peers that have been on this journey. Okay, lovely, thank you. See, you only did a little bit of warming up, and now I've got 4 hands up. Let's take 2 questions at a time. So where was one down here? Yeah, if you give me your question.
Camilla Marcus Dew from Amplify Goods. Hi. We have Reach funding that we're working through at the moment, and excited for raising this summer. My question is around governance and board. Both of us have sort of charitable, both the founders have charitable backgrounds, and we're both have had bad experiences with boards. So far in our sort of 2 and a bit years, we've had some advisors, but been really careful not to sort of create an advisory board or boards. Any advice for us if we're looking to raise a couple of £100,000 this summer, whether you think it's an absolute prerequisite to come to you with a board in place, or whether we can use your networks to help us build something that's really valuable and going to help us in the future?
Thank you. Great question. I'll come back to that. And there's another question towards the back. We'll take two this time, and then I'll take the other two after.
Hi, Bob Clark from Mama Youth Project. Christian, you mentioned that you saw a hole and you had to start something for ethnic minorities, which obviously Mama Youth Project is benefiting from. And Mike mentioned earlier that he's noticed the difference between the black-led charities that they're helping to when he did it, that they had to do more steps. Is there any advice you can give to black ethnic minority leaders? Is there some kind of trend? Is there something that's being noticed why ethnic minority or black aren't being given the funds and not getting so if there's anything you've noticed that can advise.
Okay. Yeah, great question. And yes is I think the answer to some of those, but we'll come to those. Right, yes.
So I think picking up on your point, there was a Victor Adebayoli report 2-3 years ago, and it looked at the difficulties in, or the challenges in making sure that finance, in particular social finance, was distributed fairly across all areas and all types of communities. And as a consequence, I think probably just about every social lender now is very conscious about reaching out to diverse communities. Sometimes it can be a challenge to find them, and I know, Mel, you mentioned earlier the point about, you know, it's on the social lenders to try and find these diverse communities, but there is a big programme of work out there that we're all working to try and make sure that we do reach organisations such as yourselves and make funding available. And a lot of us have funding streams where we're challenged or targeted if we're not reaching, you know, the diverse-led communities. So there is a big push out there to get this money out there.
Yeah, and there are lots of stats that essentially say that actually, if you are a diverse entrepreneur, you are more likely to consider taking investment, but you're more likely to be put off by thinking that either you don't have the skills or the capacity or the time, and so often actually less people apply. Does that make sense? It's a bit more appetite but less application. So we are all really conscious, I think more so now. It's much more transparent, we're much more conscious, and, you know, as I say, I'm not making any excuses, we need to do better.
Yeah, I just wanted to add to that point. I think it's a really important one in the sense that we need diversity of thought in the investment decisions. So, you know, we see the Investing in Women Code is focused on more female representative, but we definitely need more diversity from racialised communities as well. So one thing I can say from our investment committee on the Growth Impact Fund, you know, we have Founder Vine, we have Izzy and Cecil's there, you know, on our committee making decisions. We also have Joanne who runs Blast as well. So having that perspective, let me tell you, seeing it firsthand, we're like, okay, we didn't think about that. Let's actually think about how we approach this. Is what we're asking fair? So we have to constantly challenge ourselves and be open-minded to hear different perspectives, because investors don't have all the answers.
Absolutely not. And again, couldn't be more supportive in the making sure that we have people in decision-making places that look and sound and feel like our communities, people with lived experience. Doesn't take everybody to have financial experience to sit on an investment committee. Layla, I'll have you a quick one because I've got two more. Two more? Yeah, go. Yeah, oh yes, good. Yes. Well done. I nearly forgot, Camilla. Thank you.
But very briefly, we also have inclusion partners and like everybody else. On the boards, we have a requirement with our funds that we really want there to be 2 directors listed on Companies House, which you have. So if you don't have 2 directors, I'd encourage you to find a second director. We do look for people to have a board, but we don't insist on it. And if you don't have one, we want to know why, and we can absolutely help people in putting one together.
Yeah. So sometimes you might have come across these terms condition precedent or condition subsequent. So it might be that there might be a condition in there, but it might be something you work to. Actually, it might not need to be a condition, but definitely been some work around helping with that. I have 2 more questions, I think. So if I can take these questions, there's one here and one at the back, and then they've all got excited online now. I've got loads.
Hi, I'm Sangeeta Sengupta, and I have a CIC company called Tiffin Valley CIC. We are women-led organizations, enterprise, and we help women to get into employment. And first of all, thank you to Charity Bank that we have received the grant towards the social investment ready. So we are looking forward to it. My partial questions being responded regarding the board. We had the similar issues. So that was kind of not allowing us to go forward toward the investment ready. So that's been kind of resolved. But my question is that we are many people over here, and a lot of people are looking for the investment. So in average, how many applications do you get and how many investment you
Great
do
question.
give per year?
Lovely.
So that will give us some hope that where we stand.
Fantastic question. Lovely. Let's take the one more question at the back, because I'm conscious of time. I think we've got about 5 more minutes left. Lovely.
Hi, Hannah from P3 Charity. I was just picking up on one of the points somebody made about if you don't feel you're the right investor for an organisation, you'll signpost to another. And I don't know if I've missed this somewhere along the lines, but I was just wondering if there was an app or some kind of like brokerage service where actually you could fast track people to match to the right organisation, so if people keep sort of going round and getting to a bit of a dead end really and maybe losing a bit of hope.
Great question, Hannah. I'm happy to take that one. But let's go with the first question, which is around how many applications do we get? Oh, you're going to be brave. Go with that one.
The only reason I know this number is because I was doing my investor report this morning. But I would say per quarter, we're seeing over 100. But then if you look at the conversion rates and how many actually get through, like it's very small, right? So I think from our conversion, we probably, the ones that went through full like due diligence and we spent time on, about a handful. And then one made it through, as an example, right? So there's a lot of noise. So being really articulate in terms of your ask is really important. And like if your USP isn't clear, if we can't make out what it is, then you know it's going to be really difficult. So stress test your application with others as well, someone who isn't close to it, and to get their perspective as well.
Can you just pass the mic? You've got the mic
now. So we have a pipeline for our new fund of about 300 and something social enterprises. But we are taking on average 4 or 5 papers to committee a month. And most of those will get through eventually. So if you get to committee, you're likely to get through. But the attrition tends to be social enterprises stop talking to us and stop sending us information rather than us turning around and telling people they're not relevant or not ready. We do that at the first call if we can.
I think that was going to be my ask of all of you is, so from that 100, slightly different than 300 pipeline, but in that 100, how many, because I know there was a particular challenge with this when Growth Impact Fund first launched. How many of those people are, and I'll talk a bit to you about the people that are here today, how many of those people that probably, you know, shouldn't even be in that conversation? Sort of what's that odds like? Carolyn, did you want to go and then?
Yeah, it's quite hard to tell actually. We try and if we don't think something's worth progressing, we will turn it down very quickly. We don't want to waste people's time, and we will signpost them to someone else if we think there's someone else that can help. But similarly, if we feel something should go forward to our investment committee, probably 95, maybe even 98% of what goes to our investment committee gets sanctioned. So we've got a very experienced team working in the field, and we've got a very good idea about, you know, what's likely to get sanctioned, and we have a deal selection panel. So if we're not sure about something, we'll discuss it as a group to make sure it's something we want to recommend. But in terms of hard numbers, I mean, a lot gets turned away straight away, because it's quite obviously not for us.
I'd say it was probably a bit less than grant. I think if you'll get an early no if it's really not. You'll get a referral to somebody else if it's likely to be somebody else's appetite risk. If you get to panel, if you get through due diligence, you probably should think that the organisation really thinks that this is worth doing for you and for them. If you get to panel, then it's usually a lot less turn down rate once it gets to panel. I'm really sorry, we're right on time, and I'm just thinking about you and lunch. I've also got a couple of questions online that I just wanted to get to. Hannah, this question I think is a really good one. So you mentioned that founders should set a timeline for 6 months, and you particularly were talking about a round or a raise there, which can be about one particular type of investment. But I think, were you talking more generally like set a time scale and know how it needs to fit in?
Yeah, so just in terms of, because it takes a lot of time, and you know, the feedback we get from entrepreneurs is actually this due diligence and providing all these materials, it's taken me away from actually running the business. So I think in that sense, try and cap that time so then you can go on to full delivery once you've got that money in the bank. The other thing I would say as well is just when you're fundraising, have a data room ready with all your stuff in, just really simple file, like folder structure, and then you're not having to send stuff randomly. You just send the link to all your investors you're approaching. So just making it a bit easier for yourselves as well.
Lovely, thank you. Pete, you're online. I think the answer is probably yes, but if you want to contact us afterwards, we can talk a little bit more. It's about flexible terms in terms of, his question was, if I'm seeking investment to launch a new service where there's delayed income, can I get a loan with repayments that might be deferred for 3 to 6 months?
Yes.
I think the answer is yes. Yeah, Christian, thank you very much. And there are a few more in here. I would urge the people online, if these questions are still outstanding, you can contact myself or Olivia or Annie or one of the team, and we will pick that up afterwards. I'm just going to finish with Hannah's question. Haven't forgotten, didn't forget that one, which is about, is there a brokerage service? Brokerage is challenging because then you're starting to talk about making recommendations. There is a signposting service. It's called Good Finance. There is a fund mapper that lists over 50 different investors and funds. You can filter it by geography, by size of loan, by social issue area, by product. So that's your very best way to know what's out there. It doesn't replace the face-to-face. Actually, if you meet any one of these investors, either sat at the front or in the room, they'll tell you who else is out there. But I would definitely say do your homework. Don't feel like... I remember one of the probably most challenging stories I heard from an organisation, a social enterprise, where they got quite a long way down the conversation. And I remember asking, but why were you talking to that investor? Because that wouldn't have been where I would have signposted them to. So make sure you do your homework and don't feel like you don't have any control, because you do. I just wanted to say, I think the temperature, is it a bit better at the back now? Or is it still warm? Still a bit warm? Bit better. Well, they're hopefully going to work on the air conditioning over lunch. I just wanted to say thank you all for your participation. Thank you to panellists. Round of applause for that. Thank you. I very much enjoyed, for a change, being on, like, asking the questions rather than being asked them. And I believe we're break for lunch now. Is that right? Pardon?